Number 1 is history of banking. Banking has evolved over thousands of years, beginning with ancient civilization using rudimentary systems of lending and borrowing. The modern banking system emerged during the Renaissance period in Europe, with the establishment of the first bank providing services such as currency exchange, lending, and deposit-taking over time. Banking has become increasingly sophisticated with the development of central banks, commercial banks, and investment banks and various financial instruments to facilitate economic activity and financial transactions. Number 2, BSP function. The Bangko Sentral ng Pilipinas, or BSP, is the central bank of the Philippines and is responsible for formulating and implementing monetary policies, issuing currency, regulating banks and financial institutions, and maintaining stability in the country's financial systems. Its functions include conducting monetary operations, supervising and regulating financial institutions, managing foreign exchange reserves, promoting financial inclusions, and safeguarding the integrity of the Philippine financial systems. Number 3, bank classification. Bank can be classified based on various criteria including ownership function and geographical scope. First is the commercial banks. These banks provide a wide range of financial services to individuals, businesses, and government entities, including deposit-taking, lending, and financial advisory services. Second is rural banks. These banks primarily serve rural and agricultural communities, providing financial services tailored to the needs of farmers, small businesses, and households in rural areas. Next is cooperative banks. Owned and operated by the members, cooperative banks focus on serving specific communities or groups of individuals such as farmers, workers, or residents of a particular locality. Number 4, universal banks. These banks offer a comprehensive range of financial services, including commercial banking, investment banking, and asset management, catering to diverse customer needs across multiple sectors. Number 5, thrift banks. Thrift banks specialize in accepting deposits and providing mortgage loans and other consumers lending services, targeting individuals and small businesses. Last is Islamic banks. These banks operate in accordance with Islamic principles, prohibiting the charging of paying of interest and adhering to Sharia-compliant financing and investment practices. Number 4, different types of bank accounts. First is the savings accounts. These accounts are designed for individuals to deposit money for safekeeping while earning interest on their balances. Second is checking accounts. Checking accounts allow accounts holders to deposit with withdraw funds freely, typically through checks, debit cards, or electronic transfers. Third is time deposits, also known as certificates of deposits. Time deposit requires accounts holders to deposit funds for a specific period during which they earn a fixed interest rate. Next is money market accounts. Money market accounts offer higher interest rates than regular savings accounts and may provide check writing privilege, but they often require higher minimum balances. Last is joint accounts. Joint accounts are held by 2 or more individuals who have equal access to the funds and share responsibility for managing the accounts. Number 5, services offered by banks. Banks offer a wide range of services to meet the financial needs of individuals, businesses, and government entities, including deposit services, accepting deposits such as savings, checking, and time deposits. Next is lending services, providing loans and credit facilities to individuals and businesses for various purposes such as home mortgage, auto loans, and business financing. Next is investment services, offering investment products and advisory services, including mutual funds, stock bonds, and retirement accounts. Next is payment services, facilitating domestic and international payments and transfer through electronic funds transfers, wire transfers, checks, and credit and debit card transactions. Next is financial planning and advisory, providing financial planning, wealth management, and advisory services to help individuals and businesses achieve their financial goals. Last is foreign exchange services. buying and selling foreign currencies, issuing travelers' checks, and providing foreign exchange hedging services for businesses. Number 6, banks' organizational structures. First is Board of Directors, responsible for setting the bank's overall strategic directions, policies, and objectives. Next is Executive Management, comprised of senior executives such as the Chief Executive Officer CEO, Chief Financial Officer CFO, and Chief Operating Officer COO, who oversee day-to-day operations and decision-making. Next is business units, departments of division responsible for specific functions such as retail banking, commercial banking, and investment banking and risk management. Next is support functions, department that provides support services to the bank's operations including human resource, finance, information technology, legal compliance, and internal audit. Next is branch network, physical locations where customers can access banking services including branches, ATMs, and digital banking channels. Last is central operations, bank office functions responsible for processing transactions, managing customer accounts, and maintaining the bank system and infrastructures.
Thank you for watching.